Let's give you the markets now. Local trade set to basically set for another positive day of trade today. The local stocks closed in the green yesterday, led by the gains in the energy sector stocks. Now, the head of equity research at FNB Wealth and Investments is Chantal Marx, and she joins us now for the quick market update. Chantal, good morning to you, and good to talk to you. Let's start with the energy company Sasol, which climbed 5.7%, its highest rise since November of 2022. This is after OPEC Plus announced a surprise cut of the oil barrels yesterday, or should I say per day. How are oil prices faring today?
We're seeing another strong day for oil markets today. And I think that what is very important to recognize is that not only was production cut, which therefore results in lower supply to meet demand that remains quite solid, the expectation was actually for them to keep it level or even increase production slightly. And I think what this highlights is just how powerful OPEC Plus is in terms of determining oil prices, and ultimately those oil prices filter through into inflation. So they're actually dictating monetary policy and markets as a result of this. But yeah, another good day for oil markets, and it seems as if we're also going to have another good day for Sasol as well as a result.
Let's talk Pick n Pay, also publishing its earnings update for the 52 weeks, which ended on the 26th of February 2023. How's the retailer faring?
So they previously guided that they were going to be under pressure as a result of the additional costs pertaining to load shedding. Of course, they have to buy large amounts of diesel and burn large amounts of diesel in order to keep their energy reliability going inside their stores to prevent wastage, and it's a very expensive endeavor. It's about 50% more expensive to run a diesel generator, and a very efficient one at that, relative to using Eskom power. So there was a meaningful impact as a result of that. They're expecting earnings to decline by between 0 and 6% for that 52-week period. And if you strip out some of the one-offs, it will be a little bit worse, 12 to 18% reduction in earnings. They did manage to maintain their gross margin, though. And if we are going to see an improvement over the next few years in terms of load shedding, then I think it will bode quite well for this company, who have really drilled down into costs that they can manage and are trying to run a more efficient operation. Let's
talk Tech Resources, which has rejected a proposal from Glencore to buy the company for shares. What's going on there?
So Glencore is they're attempting to buy Tech Resources, which is a Canadian-listed company. They have a lot of exposure to base metals, similar to Glencore, and then they also have a coal business. And the idea is to put Glencore and Tech together, and then split them again, but to have the dirty coal and the ferroalloys in one business, and then to have the base metals business, which is more focused on kind of the metals of the future, in the other business. But at the same time, Tech is trying to do this by themselves as well. So they've been undergoing a massive restructuring, and the leadership team there really wants to push forward with what they were planning to begin with. And they don't necessarily want a massive tie-up with Glencore and the complexities that a big merger like that would involve. But Glencore seems quite adamant, so I think we could actually see a higher offer price coming through, and then it will become more enticing for Tech shareholders to vote in favor of such a deal.
Let's conclude with McDonald's temporarily closing its U.S. offices this week, and this is ostensibly to inform employees of planned layoffs as part of the broader restructuring of the group. Talk us through the developments there and just how many jobs are on the line.
So in terms of the amount of jobs, they're saying it runs into the hundreds, but we don't have firm confirmation of that yet. Now, in the context of McDonald's that has 150,000 employees worldwide, the layoffs aren't massive, but I think that they will impact sentiment over there. And of course, it kind of adds to this narrative that US corporates are starting to shed jobs and that labor market may finally be loosening up a little bit. The tactic to close their head office in order to affect these layoffs, I think, is quite interesting because it just removes that element of, okay, now I've been laid off, I have to go to my desk, I'm packing it into my box, and I'm leaving the building with my head hung low. So I think that's mainly the reason why they did that. But yeah, I don't think it's going to be massive for McDonald's overall in terms of how many employees they have.
Yeah, always a set time, though, for people to lose their jobs. Chantal Marx, let's leave it there. Thank you very much for that market update. She is the head of equity research at FNB Wealth and Investments.